Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything that you need to start your trading day. Good morning, traders and investors. Welcome to this Tuesday, February 21st edition of Benzinga's PreMarket Prep. I'm Spencer Israel, as always, joined by Joel Elconin and Dennis Dick. On today's show, we got the start of the big box retail season reporting. We have Walmart reporting this morning. Macy's due to report, as well. Also have Lumber Liquidators and Home Depot. So we'll cover that as well as other movers in the pre-market trading action this morning. We have two guests as well. Our first guest will be at 8:15. That's Rod Casilli. He is an options trader, but mostly he is the head of product management at Collective 2. They're a very interesting trading fintech startups, so we'll talk to him about what they do. And then also it is Tuesday, so we're joined by Nick Shaheen at 8:35. He's our options guru. He's the author of Create Income with Option Spreads on Marketify. Joel, how was your nice long weekend?
Nice. Got a lot of things done around the house. Spent 2 hours at the car dealership getting my oil changed. That wasn't fun. But back here to cover the markets. S&P and uncharted waters up 4.5. Pre-market high 54.25. The low right there near the close from Friday, 48 even is the close, 49 even. Pre-market low. Crude about that a little bit when Dennis gets on here. Could crude be breaking out here? The March contract has cleared the $54 level for now. Will it hold? We will see. Gold and silver trading lower. Gold down back under $12.50 by $20, down $8.50. Silver under 18 at $17.90. Dennis, how was family day?
It was good. Fun day. Just kind of took it easy, but went to a little local park with the little boy, and he fed birds. So lots of excitement there.
All right. So let's move on here. I just wanted to get your opinion here. You'll probably have to look at the USO chart here, but crude, after quite some time trading between 50.5, 51, and 54 here we are trading at 54.32, up 92 cents here. You think finally we're going to get another move to the upside in the crude oil market?
Hard to say. I mean, it seems like we get an upside eventually in everything here. I mean, this is the market that every pullback gets bought. Even look at Friday's action in the overall market. We're down significantly throughout the day, and then some big buy imbalances come in on the option expiration and drives us, and we start to go right to positive there again. I mean, this is the market you just can't seem to keep down. So even, looking at the commodities, same story there. It seems like every time we get a pullback now in crude, people come buying here as well. I don't know. This is just the buy the dip market, Joel. Buy the dip.
Buy the dip and everything. All right.
Seems like it.
All right. Well, we got some good earnings here. I don't know if you had any dips to buy here, but what big report would you like to start out with?
Well, I did. I actually did have a dip to buy in Walmart. It was trading down Friday night ahead of the report, and I was like, what the hell? I took a flyer on it ahead of the report and actually bought some at 68.5. Walmart's trading up 71.30. Scalper blood me, I've already sold, but stock is trading higher here on their report. Sounds like it was a pretty good report there, Spencer.
Yeah, so the Q4 EPS, $1.30 versus $1.29. That's revenue, $130.94 billion versus $131. That's not really the number that matters, though. The number that matters is that their Q4 e-commerce was up 29%, and they also see Q1 of 2018 EPS at 90 cents to $1. That's in line with the estimate. The fiscal year EPS is also in line with the estimate, but that e-commerce is killing it. Also, they did raise their dividend by a penny, up to 51 cents per share.
Stock in a nice $2 lift. It's a big lift for Walmart. Trading up 2 points. Lots of overhead resistance. I look at that $72 level, Joel, just going out to the dailies. That's kind of the level that jumps out to me. We are trading 60 cents away from there, but if we were to continue this rally here, I think you might run into some resistance on a big, heavy market cap stock like Walmart up there at 72.
Was it like an iceberg? It was just someone out to lunch selling a couple thousand shares? What was...
what are you talking about?
Yesterday on Friday after.
Oh, Friday night when I was buying. No, somebody was just... There was a lot of stock trading trade, and it wasn't an iceberg. Just some people were just selling it off ahead. So sometimes you get nervous Nellies ahead of the report, and when it's offered down 90 cents ahead of the report, I feel like I got a little bit of a lead. So I'm like, okay, well, even if Walmart misses, does it fall 90 cents? If they miss badly, I probably lose on that trade. It probably goes down 67, 66, and then you're not going to like that you bought it at 60 and a half. But I'm like, if they come in line, I'm like, Walmart's sentiment towards that isn't that high. I'm like, it probably rallies. So I didn't mind taking a risk there. I felt like I had, that when they're offering it down 90 cents ahead of the report, I feel like I've got enough edge to take a risk on. I mean, if you're, new to trading, I don't suggest that at all. And I wouldn't put huge size on something like that. I never suggest huge size going into an earnings report, but sometimes I'll take a flyer. I was feeling pretty good that maybe Walmart could come in line and maybe rally, and already a 90-cent lead. It worked out for me. Now, like I said, I've already sold this one. I sold in the 70 handle a little bit too early. It's up at 71.33 here right now. The rally has continued, but when you make 2 points in Walmart, it's hard to look the gift horse in the mouth, Joel.
330,000 shares have traded this morning, so it's going to probably take a lot more to get it to open up at this level, but not really backing off the pre-market high of 71.40. Looking at Walmart here, bases the daily charts. I do see a couple highs in the 71 handle, and that is just under $72. Dennis mentioned that. Actually, 4 highs between 71.64 and 71.93, with the topper being 72 even. So that's your sell zone. Perhaps if you're long, not sure if you're attempting a short, but a lot of highs up there near 72. We'll see if they go and get them.
The other big report everybody's talking about this morning, reporting around 6 o'clock, Home Depot. They always report early before I'm awake. $2.90 is trading up here in the pre-market. This is new all-time highs for HD, and I tell you, man, this stock just continues to beat and to obviously continue to go higher. What's the report there, Spencer?
Q4 EPS $1.44 versus $1.33. Revenue 22.2 versus $21.8 billion. So a beat there on both. They see their fiscal year 2017 EPS at $7.13 versus $7.17. They are also raising their dividend from 69 cents per share to 89 cents per share.
It's a big bump.
Big bump.
The value players like that when the dividend's going up that much. Oh, it puts the yield at probably over 2%.
146.95. That's your pre-market high. We've backed off from that area, so really no other reference points except for the pre-market high. I guess if it really gets juicy here, which I doubt, maybe we'll see 150, but you don't want to say anything in this market. If we come back down ever to try and fill the gap here, 143.12, that was that new all-time high on Friday, as well as the all-time closing high at 143 even. I was talking about this on Stocks and Jocks this morning. If you think about it, between Menards and Home Depot and Lowe's, maybe a few A's, I mean, they've gotten rid of all the mom and pop shops. They got a handle on it. You know where you need to go. So the chief was calling it a monopoly. I don't know if you could quite call it a monopoly.
Well, a duopoly between Lowe's and
exactly.
Obviously Home Depot maybe, but you look at Lowe's here, $77.60. It's getting a nice lift on it too. Obviously, those two stocks, a lot of people pair trade those two stocks together. We're going to have Rob Friesen on Friday. He's going to talk about pairs. Obviously, that's a big strategy there at Bright Trading, something I employ as well. But just looking here, impressive move here for Home Depot, and Lowe's getting a sympathy move as well.
And Macy's is out trading up $1.20.
You know what? This is one I had on my buy list too. I wanted to take it long into the report. I was itching to take it long into the report, and I was hoping they would miss and it would pull back. And it's not happening here this morning. And that report isn't that great, but people just want to buy these stocks right now. They've been really, this is the type of market you've got to start to realize and start to look at what's happening overall. And, what we've been saying on the show here for the last week or so is the laggards have been starting to outperform. The retail in the last week and a half has shown life. Biotech has really started to show life in the last couple of weeks here. And it's a laggard market right now. Those are the ones that are outperforming all of a sudden. So they want an excuse to buy these stocks. I haven't even seen the Macy's report or read it here yet, but I wanted to buy it ahead of the report. It's obviously lifting $1. So how do they do, Spencer? Talk to us.
Well, how do you think it did based on the chart? Let's start with that.
I would say Macy's probably, today obviously it's trading higher, so they must have either beat or they actually must have said something good somewhere, looking for an excuse to buy.
All right. Q4 EPS $2.02 versus $1.96, so a slight beat. Revenue 8.52 versus 8.62, so a miss. Fiscal year 17 EPS guidance $2.90 to $3.15. $3.20 was the estimate. Yes, very light guidance.
Yeah, and if we're looking at my algorithm, you would say it's going down, but there's other factors involved too. And I think in my algorithm, I say guidance is greater than earnings, but sentiment trumps all sometimes. And right now, the sentiment towards the retailers has turned. They have started to show life. I mean, you look at Kohl's, you look at JWN, those have started at bottom, they started to show some life. And this Macy's, and there's people still thinking that there's a potential for a bid out there. You talk to Hudson's Bay Company. There's been a lot of different rumors kicking around, but those are still potentially out there. And I think that's why people here are looking at Macy's and saying the stock is still cheap. The stock is still making money, even if they make $2.85. You're talking about trading at a multiple of 12. Now, am I jumping in here in Macy's? No, because I'm still worried long term. I'm not sure if there's something bigger happening here. And I think, that's the overall picture. But short term, just from a trading perspective, these stocks are back in favor.
You got the Barron's bump a couple weeks ago. Favorable talk about a potential merger. It just seems that Macy's, just looking at it, they've kind of been ahead of the curve. They've now been going down. They've been closing stores. They've been going more towards e-commerce. So it seems like they're trying to go in the right direction. We just got a nice pop up here to 33.60. Just keeping an eye on two levels here, 33.23.
All right, I think we are back. Welcome back, traders and investors. Sorry about that brief commercial interruption brought to you by Comcast. Going to go ahead and throw them under the bus for that one. But we are back, and I was talking about lumber liquidators. They reported, repeat that, Q4 EPS 20-cent loss versus a 31-cent loss estimate. Revenue 244.9 versus 242.2 million. So they beat on the EPS and they beat on the rev, but it's still LL.
Dennis, are you back? You got a call back?
Why don't you give us some levels, Joel?
Okay, we are looking at lumber liquidators trading up near the highs of the pre-market session. Pre-market high is 1648. Lumber liquidators, a stock we haven't talked about in a long time, is trading an important resistance level. You had a pair of highs just under 1650 back February 10th, February 13th, and then right. So I'm calling 1650. That's your level. If not, look for your whole number 17. Just above that, 1734 has been the recent high of the move. All right, it is 8:15 here, and we are going to take a planned break for the day. We're going to bring on our first guest, Rod Casilli, derivatives trader, head of product management at Collective 2. We'll be right back with Rod.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
right, welcome back, traders and investors. This has been Zynga's Pre-Market Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. We're on the line now with Rod Casilli. He is an options trader, but he's also the head of product. All right, welcome back, traders and investors, to Benzinga's Pre-Market Prep. Let's try this again. We're on the line with Rod Casilli. He is an options trader, but more than that, he is the head of product management at Collective 2, all the way out in California. So, Rod, thanks so much for joining us bright and early.
Thanks for having me, guys.
Tell us a little bit about Collective 2 and what exactly it is you guys do. When you and I spoke last week, you said you're the Uber of finance is how you described yourself. So what exactly does that mean?
Yeah, probably the Uber of finance without all the political turmoil that company goes through.
Right.
So essentially, we're an online marketplace that connect independent traders with investors that are seeking to diversify or look for more alpha in their portfolios. So what we can do is we can monitor the actual trades. These are out of sample, walk forward real trades from traders' brokerage accounts. We put those in a model portfolio. Then we throw enough stats at them to make the any quant real happy with the analysis, and then we present them to investors of the whole world to see those track records and potentially follow those signals via email or SMS or text, or if they'd like, they can actually have them auto trade in their own brokerage account. So we're basically one big API that connects alpha across the internet.
So explain how it works. I'm a retail trader, and I sign up for Collective too. Like, what happens after that? Like, I trade as I normally would, and then you do the rest.
Right. Well, the first thing you have to do is determine how you're going to get your signals to Collective 2. We offer about 6 different methods of doing that. So we want to try to be an environment that can support all different types of traders, regardless of how they, what their approaches are to the markets. So the cleanest way is we do connect to some popular brokerage platforms like TWS, which is the interactive brokerage platform. So if you use that method, yeah, you just go about trading your account as you normally would. We intercept those trades, we drop them into your model portfolio, and your work is done on the trading side. You could also write to our API. You could publish an algorithm. We have a full environment in which you can write to various languages and publish. You could send an email. I mean, really everything short of standing on the top of a mountain and putting out a smoke signal. We're going to be able to capture your trade. So there's a variety of different ways. The most popular is probably again the brokerage platform or popular third-party platforms like NinjaTrader, TradeStation, Multicharts, MT4. We support all those. We want to make it as easy as possible for people to publish to our platform.
So what is like the end game? Like, I guess what is the benefit for traders to use Collective 2?
Well, there's a couple benefits. I mean, the one, we're a different part of my business, and I saw all these traders and educators out there, many of them well-intentioned, but the biggest complaint was, how do I verify that these folks, in some cases, are trading live capital, in other cases are, consistently profitable and not only showing their bad trades with their good trades. So we're a third-party, out-of-sample verified environment in which traders can publish their trading track record and really prove what they've got. Now, for those traders that end up being successful and can build a track record on our platform, they can charge subscription fees to get access to their trade signals. So it's another way of earning additional income from doing what they're already doing. So that's the basic gist and the benefit for the traders.
And the site is called Collective 2. That's the number 2, Collective2. .com. So I guess first of all, how long have you been involved with the company? But also since you've been involved, what have you observed any patterns with regards to how people have you looked at data? Have you seen how people have been trading, or you're a trader yourself? So I mean, what kind of patterns are you seeing with regards to the retail trading habit?
Yeah, I mean, I think our data is fascinating. I mean, we're not a broker dealer. We don't have quite the same amount of data that one of the large broker dealers might have to sort of analyze sentiment in terms of retail traders. I think before I get into data, one thing that's important to point out is that our community, we've been at this for about 12 years. It's very, very diverse. So while we say retail trader, and that's predominantly because the vast majority of the trade leaders, that's what we call people managing a model portfolio in Collective 2, are indeed not full-time professional traders. They have other jobs. They're able to manage their portfolio, sort of dance between the raindrops as they have their other career. But many are actually professional traders. They're professional traders. They might run a small algo shop, or we even have some hedge funds that actually test strategies on Collective 2 for all the reasons I mentioned before about it being an environment where it's walk forward, it's real time, and it's a good environment for that. But getting back to the data, yeah, that's what I look at all day long. I think that the one thing that we do know is that our community tends to work a little bit more with derivatives than just pure straight equity. So as opposed to what their trading styles are, they're properly, I know properly is a pretty heavily weighted word, but they're using leverage, I think, prudently in terms of derivative options and futures markets, because there's can tend to be more alpha there. So you'll see more options and futures strategies on Collective 2 currently than you might see just sort of straight long short equity, which is predominantly what a lot of retail traders and what a lot of the investment public kind of focuses on, is what's going on with just pure stocks. But other than that, I think what we see is our traders go where the action is. Not much different than probably a lot of your audience, which is looking for what's moving, what's happening, where can I see price dislocation. So we see this year a lot of short VIX strategies, which is going to work until it doesn't, right? You're just sort of pounding that VIX until it eventually pops. We see a lot of trend following strategies that are doing pretty well. And similar to what we hear from some of these, large retail brokers like TD Ameritrade, and they come on the financial media and talk about how they've seen their traders really get more intelligent and seem to not necessarily be the dumb retail money we've always heard about in the past. Our community really, really reflects a lot of insight and intelligence in terms of the market